The truth about Carnival Cruise CCL. Now, a lot of people are freaking out about cruise ship stocks right now because of the coronavirus, which is pretty reasonable considering they're being halted at ports and people can't even get off of their cruises and they're being quarantined, they're going to hospitals, people are like scared that they're gonna die, which is a very, very valid fear. So the question is, like, what the heck's going on with cruise ship stocks? I've made a whole new portfolio in my watch list, and the whole watch list is just like cruise ship stocks. And it's just been a wild ride with a lot of really just explosive growth, explosive contraction happening. And I want to tackle the question of what's actually going on with specifically Carnival, because they own almost half of the market share for international cruises. And it's important that they are international cruises, and we'll get to why in just a moment, because it really affects the way that they actually operate their ships and treat their employees, which is just massively critical. But first, the most important thing you're going to see when you look at the stock right now, besides the fact that they're up 17% today, which is kind of crazy, is their dividend. Their dividend is absolutely massive. It's 13.5%. Now, I don't know if they're going to lower this or not. Obviously, it was only about 6 or 7% a couple of weeks ago, but now it's doubled because the price of the stock is halved. If we look at the chart, they've paid dividends historically really well, but they did stop paying dividends in 2008, 2009. So, once we enter a recession, the question is, are they going to stop paying dividends like they did during the last recession? And with a 14% dividend, I think that there's a fairly good chance that dividend may disappear because of their financials, which we'll get to in just a moment. But just think about it logically, okay? If there's a slowdown in the cruise ships for any amount of time at all because people are freaking out and no one wants to die and no one wants to go on cruises because of the virus, they're going to have sort of a contraction, at least in the short term, of operating margin and profit. And so even if their overarching business stays growing, and they're expanding, which they've been doing historically, people want to go on vacation, people like buying cruise ship, tickets. It's a small business. But if in the short term they have a slight downturn because of the virus, the question is, are they still going to pay the dividends, right? It's still going to pay out money on a consistent basis. And just thinking about this logically, if the company makes 75% less money because no one's buying cruises, they're literally closing down their cruise ship. Even if they recover in the long term, right? that'd be cool. That's great. But I think there's definitely a very high chance that there's going to be at least some period of time where they have less income, and less income leads to no or low dividend, and I think that's pretty reasonable. And I won't usually harp on dividends. Dividends usually aren't that big of a deal. They're just kind of shsugar on the cake. But at 13%, it warrants looking at this a little bit more deeply, because that's really crazy. The stock's up 20% today, but 30% dividend, it's pretty high. So let's look at their statistics really quickly. I want to look at their dividend payout ratio historically, which again will probably change a lot just based off of the overall market for cruise ships right now with the virus, right? And I do want you to understand though that when we talk about the virus, it's not everyone's gonna die. Hopefully, right? If you're watching this, then hopefully everybody didn't die. And so in the long term, there's gonna be some kind of recovery, right? And that's gonna come to the benefit of these cruise ships. That's going to come to the benefit of the overarching global economy. But most importantly, it's going to come to the benefit of CCL. And so, when we look at these numbers, it's important to realize they might have a temporary dip just because of short-term conditions. But in the long term, they should do pretty well. We'll look at why in just a moment. So right now, the dividend payout ratio is about 46%. So they take in $100, they get $100 from people that pay to go on their cruises. And whatever profit they make, they take almost half of that profit and they give it out to shareholders in forms of dividends. So it's pretty reasonable. They're a pretty well-established company. They have a really dominant share in the market. And they have basically all the cruise ship lines they could operate, from what I can tell. And so it makes sense that they're returning a really solid chunk of their money to investors. And that's good to see, especially for an established company. These guys, they IPO'd in 1986, so they've been around the block for decades and decades and decades. So it's good to see a high dividend payout ratio. It makes sense. It's also really good to see that their book value is $37 a share, and right now they're a $20 stock. So if tomorrow they went and they took all their cruise ships and they took most of the other assets that they have, which I'm assuming are mostly cruise ships, and they took everything that they had and they just went out onto the open market tomorrow and they sold everything, just got rid of it all, everything they have would be worth about $34 a share, which is like that's really refreshing. That makes the company look really solid, especially in a term like with a recession coming and these downturns. It's really good to see that, like, if they did go solvent, which is not really going to happen, they've survived many stock crashes, and they've gone through the ages being a well-established company. But it's good to see that, like, even in the worst case scenario, they have a good chunk of assets they could sell off, and look at the balance sheet soon. But the important thing to see here is that they do, like, they're actually worth their weight in water. And very rarely are you going to see a stock price below the book value. It almost only happens during, like, recessions or really troubling, challenging times, which is kind of what we have going on right now. And so this is really a stock at, like, 17 right now, and the share price at 34, or the book value at 34. That is really good. It shows that there's a lot of value here on the table. Now, this is not like a guarantee buy. There's a couple other factors to look at, but that's a really nice factor to see. Now, if we look a little bit more at these statistics, we can see that basically they've been about a $30 billion company up until this year when their stock crashed. Now they're a $20 billion company. And their enterprise value has decreased by about $10 billion as well during that time period, which I think a lot of that does have to do with temporary news. You've seen these guys, they are very volatile. They've gone from $40 to $20 before. They've gone from $50 to $20 before. Now they've gone from $60 to $20 before. Like, this is nothing new. They've done this many times during economic recessions and crashes. It's not like surprising to see something go this low. If we look a little bit deeper at their profit margins, they're really nice, almost 15%. I did some very in-depth active research, and I found this very in-depth graph of where Carnival actually spends their money. And you got to remember right now, they've got a lot of these cruise ships that are kind of just sitting at docks because they aren't able to sell tickets because there's the virus and all that stuff. And so a lot of people are freaking out because they're just sitting here stationary and nothing's really happening with them, and they don't really know what's going to happen with the stock. And so I was looking at this, and I was thinking about what actually having these cruise ships, which it costs hundreds of millions of dollars to make a cruise ship. These are not cheap investments. They're pretty freaking cruise ships are gigantic ships. I mean, just think about it logically. That's a very expensive investment, and we'll look at that in just a moment when we look at their long-term debt, because it's going to be reflected in their debt since they're going to use debt to finance these ships. But I wanted to look at these numbers, and what I realized is that a lot of these numbers, like depreciation, amortization, and profit, and taxes, and operating expenses, selling and administrative, those are expenses that are going to be around no matter what. Whether or not the ship sails, they're still going to have their office building workers and stuff like that, which totally makes sense. But then I realized there are a lot of expenses here that really don't actually become expenses when the ship isn't moving. So, for instance, and I'm going to write these down as percentages because I think it makes the most sense to write it down as a percentage. 1% comes from tours, which are not going to happen if the ship isn't going, and then another 15.5% comes from operating the ship expenses. So we got about 15.5% from that. And then if we look at this again, we can see that about 6% comes from food, and 5.5% comes from fuel. So we'll call it 5.5% fuel, we'll call it 6% food, fuel, operations, tours. And now we start to add all this stuff up, and we realize that when another 12% comes from payroll for the people on the ship, we'll call this, employees, all of a sudden, their expenses start to go down a lot. Another 3.5% is miscellaneous onboard stuff, and then they have this 13% that comes from commissions, transportation, and other. I'm thinking a lot of that's from advertising or sales, or just transportation. I know they're paying a boatload of money to send people back home after they had to dock a bunch of their ships. So to be conservative, I'm just gonna ignore that number because I know they have incurred a lot of expenses having to ship people back home after their cruises got boarded or got grounded. I know for a fact there were a lot of American cruises that got stuck in Australia, and they had to pay to send everybody back on planes to America. And so that's probably one of those examples where that chunk of their money is still getting spent pretty hardcore. Even though airline tickets are super cheap, you can literally get a round trip ticket right now to Italy for I think $200, which is crazy because if you go there, you're probably gonna die. Which is anyway. That was other onboard expenses. I'm gonna leave that 15% commissions and other stuff out, just because there's some expenses like that, and I want to be pretty conservative with my estimates. I like to be pretty conservative. So if we look at this, we've got 16.5, 17, 23, 29 plus 12 is 39, 41. And then we add 3.5, we get 41.5, 40. We'll call it 44.5% of their expenses come from general ship operations. So when they're not like actually operating their ship, all of a sudden their expenses are 65% less, right? Which is really, really good, considering that they need to be trimming the fat, so to say, or sticking with. They need to stay afloat during these next couple of months, during maybe the next half year or so with this virus, because no one's really gonna be buying ship tickets, and so it's good to see that they can trim their expenses, which is really, really important. We're gonna get to the financials. We'll look at the financials real quick. I think it makes sense to look at these financials now that we understand a little bit more about how this is working. If we look at the revenue has been growing very, 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 very steadily. We're looking at like a $20 billion a year company, which is phenomenal considering that the market cap on this stock is $12 billion. So I mean, like, just with compare and contrast, they're making $20 billion in top line, and that is translating to $2-3 billion in the bottom line. Their bottom line has been growing. It's a very stable bottom line. They have consistent about 10% profit margins, give or take. And so they're trading at a multiple right now of about 12 times earnings, which is, their earnings are $3 billion, so give or take 4 times earnings. Yeah, their PE right now is 4. I mean, guys, that's because of them losing a lot of business. But their PE is extraordinarily low, and even if the PE doubles because of a slowdown, I mean, you're still looking at a PE of what, 8, maybe 12? At this price, I mean, it's a really, really compelling PE. And so we look at this, and basically their profit is gone. I mean, it's just a really solid business. If you look at the numbers, their numbers are great. International cruise ship travel is extraordinarily lucrative for them, and they make a ton of money. They dominate the market, and they really just do really. It looks like Q3 is probably their best quarter, and they just crush it over and over and over and over again. That's probably because people like taking tons of cruises in summer, which makes tons and tons of sense. If we look at their cash flow, you're going to see a very, 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 very similar story. Their net income grows. They're depreciating their ships, which is great, and they have very small amounts of compensation. Only $50 million of compensation in a company that has a market cap of $12 billion. That is very, 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 very small. And we're going to get to why in just a moment, but the way that they pay their employees is so absolutely foundational and critical. And I think it's the one thing that could really save the stock from solvency. And it has proven to save the stock from solvency over and over and over again, crash after crash after crash after crash, because they've just been around so long. And so you can see some smaller numbers here, little investments here and there, but really a bulk of it is going towards their cruise ships, right? Investments in their cruise ships, right? Which is the business that they're in. It totally makes sense. And also a bunch of it is dividends paid. And at the end here, there's one thing I want to look at on the balance sheet that I think is really important. Especially when the stock goes down this low, and that's shareholders' equity. Right now, even though their stock has literally plummeted and it's down by like almost over 50% or 100%, it's crashed really hardcore. There is still a stockholders' equity in this company of $25 billion, which is really, 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 really good. You would expect to see a company with this much troubling time, like going through this much trouble with negative shareholders' equity, where they're going underwater and there's a lot of difficulties, but that is not the case here. You can see they have tons of cash, they have tons of receivables, and their current assets include, obviously, I guess, their cruise ships, which are worth $57 billion and are depreciating like nobody's business, which is great for taxes, and tons of goodwill, tons of assets. I mean, they just have a lot of assets that they've accumulated over decades and decades and decades of buying cruise ships. And obviously that's a lot of it's financed. They got about $10 billion in long-term debt services every single year. So that's probably where a bulk of the revenue is going, like when it comes in the door. A lot of it's gonna go towards servicing long-term debt, because if you think about it, like, I would say give or take 80% of their expenses, this is an estimate, but I mean, a lot of their money is basically just going to paying off the cruise ship, and then that's basically like their biggest expense. I mean, besides employees, like you got employees, you got a cruise ship. I mean, what else do you need? You need like licenses to go to ports, but international port licenses are super cheap, and that's why, they'll go and they'll register these cruise ships in the middle of nowhere. Like you've got the States, right? But they won't register these cruise ships in the States. This is why a vast majority of all cruises are like quote unquote international cruises. A lot of people think, oh, they're international cruises because it's more luxurious or it's more expensive or whatever. But in reality, cruise ships, like a vast bulk of cruise ships, register their status in like these territories way outside of the United States, in the middle of nowhere. Sometimes on like these little islands that nobody's ever heard of, that have very, very few, like literally, there are islands, I think, oh God, what's the name of it? This is one island. It's got like, I think 600 people that live on it, and I think almost 60 or 70% of all American cruise ships are registered on this island because they have very, very, very lackluster laws about about sea regulation. Because what's interesting is when you register a ship, the place that you register it in determines the laws that regulate the ship when it's in international waters, which off the top of my head is about, I think, 20 miles off the coast of any country. So as soon as a cruise ship gets 20 miles off the coast of America, it's in international waters, and the laws that regulate it are not American laws, even if it's coming and it can, there's a bunch of Americans on the ship. American laws don't regulate that cruise ship. The laws that regulate the cruise ship are the laws of the country that registered the cruise ship. And so that's why so many of these cruise ship companies, they register them in the middle of nowhere where there's no laws, and now they can go and they can do whatever they want internationally. They can, have lower drinking age, but more importantly, they have way, way, way less regulations, which should be probably the large expense, and that's employees. So they're able to pay their employees a minimum wage of about $2.13 an hour for most of the companies, most of the cruise ships. They pay about $2.13 an hour on average, and some of them, they don't even get paid, and they just work off of tips, and their compensation is they get to live, they get housing on the cruise ship. And so you'll see a lot of these cruise ships, housing plus food, and then that's all they pay the people that work on the ship. And so you'll see a lot of these employees are not really American employees, but instead they're like more challenged individuals from these really faraway countries or international countries that come to work for these cruise ship companies, and they all come in troves, they all come to work, and they will work for next to nothing just to have a place to live and food to eat. And that allows them to have really, really, really low employment expenses, which makes it, first of all, very, very profitable to run their ships, but also makes it extraordinarily easy to cut these individuals off when business goes down, to turn them back to their homeland when they run out of cruises to send them on. Now, I don't know exactly how they've been handling the situation just because it's a very, very recent development, and I don't know whether or not for a fact they've been sending these individuals home or they've been keeping them, I don't know if they've been keeping them on these cruise ships, feeding them, but I know for a fact that these individuals are getting paid extraordinarily small amounts of money for the work that they're doing, and a bulk of them are getting paid like way less than what Americans would consider minimum wage, because internationally minimum wage is way, 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 way lower, because they're not being regulated by the laws of America. And that's why all these cruise ships are international cruises, because they have, if you sail from a United States port to a United States port, then your cruise ship has to be registered with the United States. But, so like if you go from like California to Texas, like you have to be registered with America. But what's interesting is if you go from like California to Disney Island in the Bahamas, and then you go back from the Bahamas to California, or I guess probably a more reasonable place to go to would be Florida. But if you go from America to some other country and then back to America, like you don't have to be registered with America. You can totally get away with following all these super sketchy, lenient international laws that also allow them to save a bunch on a lot of regulatory costs, which is really useful. I mean, this is why you have things like Disney Island, which is literally an island that they built in the middle of dog shit nowhere in the Bahamas, so that they could register it in the Bahamas, so they could send their cruises to the Disney Island, so that they wouldn't have to deal with this American regulation, so they wouldn't have to pay so much for their employees, so they could have lower operating costs, lower expenses, and thereby have a really, really, really low cost to operate their ships, less than 45% of net or gross income. That's kind of the story with these cruise ship stocks, is you really have some great opportunity here because they're run very, very, very effectively in a way that really maximizes a shareholder value and cash on hand. And they're also sort of managed in a way that is really, really nice for paying out high dividends and just maintaining quality value over time. The only thing that is harsh about CCL is there's just been a dip in quarterly earnings because there's a virus that's stopping like almost all international travel. It's not like news to anybody. And so like that's really the one thing to look at here. And the question is like, is this a great buy? And if it is, like when's the time to get in? Or how long term is this investment? Is this a good long term or is it short term? Or what's the call on that? And that's really what I want to tackle here because these guys, if we go over real quick to the stock chart, we can see really the full extent of what's been going on with Carnival. And it's pretty ugly, like I'm not gonna lie. If you look at this chart, they have gone to some really, really high historic lows just because, you know, all their cruise ships are grounded and you know, it's pretty reasonable to think that this would happen. But it's really interesting. If you look at the weekly chart, it's a little bit more difficult to understand really what's going on here. But if we look at, I mean, besides these really big red volume bars, which is good, it shows a lot of people are like selling out, cashing out of their positions. You can see last time they had volume bars that were this red. I'll zoom out so you can see it a little bit better. The last time they had really big red volume bars like this was in 2008 when they were crashing, and again in 2000 when they were crashing. And so we see it again right now when they're crashing, and it's just a really good indicator of a bottoming in price, which is awesome. But with that said, it's kind of hard to see anything else. So I'm going to go over to the monthly chart. And this is where we start to see a different story when we look at the MACD, which is really useful. So we can see in 2000, the MACD crossed, and then within like a couple of months, they crashed. And then the MACD crossed, and they had a bull run until the MACD crossed. And then within a couple of months, they crashed. A couple of years, they crashed. Then they crashed, they crashed, they crashed, they crashed. And the MACD crossed, and then they went up for an entire bull run until right now. Right here, the MACD crossed, but then it faded out and it crossed again. But then it had this big cross right here, and then it crashed and 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 it crashed, and it just kept on crashing. And so really the strategy here, very, very simplistically, is like if you look at it in 2008, like you could have bought it at the very bottom for, you know, give or take $20, or if you just waited for the MACD cross at $25, you basically eradicated all of your downside risk and had a completely almost guaranteed, like really, really high probability trade, because when it has MACD crosses, it turns around really quickly. And then the stock went from 25 to 50 or 40, 45 or so within, you know, a year. And so I think that's really the goal here. Like, yes, you can try to time the bottom, but it's going to be difficult. This is really a market play. So if the market keeps on freaking out about coronavirus, then these guys are going to keep on going down. It's not that difficult of an equation. There is a really nice support level at about $17, just because if you look right here, they bottomed out at 17 here, they bottomed out at 18 here, so maybe $18. Like there's a really nice support level at 18, $17, which is what they're at right now. But they could still, you know, go lower. There's really no telling how low this is going to go. It's just a hard one to predict. Like this could last, I'm thinking probably 4 months or so. Like however long the coronavirus outbreak panic lasts is probably about how long this downturn is going to last. So it's really a play on news. But the moment that this monthly MACD crosses, like I would be in this thing hardcore. Before we talk about the time frame of this trade, let's look at the annual report and understand what fuels the underlying company, so we can know whether or not this is a quality long-term investment or if it's maybe just a swing trade. So the first thing you're going to see when you look at the annual report is basically they made a ton of money, which is awesome. Their earnings per share is phenomenal. They're like basically they're just making, like they're selling cruise ships. I mean, it's a good business to be in. They're international, so in America, they're in Europe, they're in the UK, they're in Australia, and obviously this is why they have a little bit more exposure to the coronavirus outbreak, because they are an international company. They're going to have more risk associated. Like people are going to freak out more because of the virus, because basically it's a lot worse in those countries. And so you know, we can look at the coronavirus map all day, but basically the more the outbreak spreads around the world, the harder it's going to be on these guys, because it's basically crushing their entire business. But it's cool to see basically that their ships are a bulk of their costs, and then everything else is pretty low. So that's just like what we saw earlier. If we look deeper in this annual report, we can see that basically they take deposits, and then they recognize these deposits as revenue. I'm guessing that a bunch of these deposits are going to have to be refunded because they're canceling all their cruises because there's a virus that can kill everybody. And so, you know, because they include refundable deposits in their balance sheets as revenue, likely we'll see a temporary dip in the next earnings report based off of all the refunds they have to make, plus also all the operating losses from all the ships not going, and additionally them having to cover flights back home from people that got stranded after they were on a cruise. So those are probably going to be three main factors that could really kind of crush the stock next earnings report date. They report next Tuesday. So my guess, just off the top of my head, is this next Tuesday report that they have is going to be pretty bad. It's a 50-50 shot, but if the coronavirus news is bad this week, then this will probably be a pretty harsh report for them. That could hurt a lot, just because they're telling everybody how much money they lost. We'll see. It's the report for, I guess, the first quarter, so they could still have some revenues from the early parts of the first quarter before the virus really started to get out of hand in February. And we'll kind of see how that turns out for them. There's no guarantee on that. It's an earnings report, right? But signs point to they're going to lose a lot of money. So we'll see, because that report comes out really, really soon. But it's really not a big deal in the long term if you're looking at that. They have to pay international taxes, which I guess makes sense. It's about 5% in these countries. It looks like they also pay taxes here. So I'm sure that factors into their bottom line, just because they have to operate internationally, which I'm sure is fine because they can price it into their tickets. It's not that big of a deal. Really, the most interesting thing I wanted to look at here was their grant date fair value, which means sort of their compensation plans, but more importantly, how they're vested. So you can see a lot of the shares that they give out to executives, higher level ups. Remember, most of their employees are getting paid next to nothing. People that are getting paid a lot of money are trying to do things really, really smart for the company, and they're trying to be the leaders in the company and move it on to that next stage of growth. So when you see vested shares, that's really, really great, because you can see almost 1.5 million shares vested, which is about 15 million, versus only 1 million granted, which is about 10 million. And you see that over and over again. The granted number of shares is less than the vested number of shares. The granted number of shares here was the first year that it was more than the vested number of shares. It's good to see that the granted number of shares is less than the vested number of shares. Because what it means is that basically they've allocated this pool right here of vested shares for their employees, for their high-level C-suite guys, for the office workers. They say, look, you only get access to this money if the company does well. So we have to do well for you to have access to these, stock compensation plans. And instead of just saying, look, here is basically, just granted shares, here's some money, which is awesome. It's great for the employees, but it's not as great for the shareholders because it doesn't give them as much of an incentive to expand the company. So it's good to see that you have a lot of vested shares here, because it's going to motivate everyone that's working there to actually go and try to get the company up to the next level and to do really well and recover from this. The last big thing we see kind of looking through here is really pretty simple. You're going to see a lot of the same things we saw on the books, but their goodwill comes from them being probably the biggest people on the planet in this industry, and then their brand value, the routes that they take, the routes they take, the forecasted future, for fuel expenses, which I think kind of makes sense, especially with fuel prices plummeting. It's going to be great for these guys because their ships consume millions of gallons of fuel, so it's going to be awesome for them to have really, really cheap fuel, and I'm sure they'll take advantage of that if they're doing anything smart, which they should be because they're incentivized to do smart things. And then obviously the weighted average cost of capital for themselves, which is important for them because most of their business is funded off of debt, buying cruise ships, and then using those cruise ships to go and sell cruises, right? Which totally makes sense. But that's really, I think, probably the biggest takeaways from this annual report. It's a really well-run company. The valuation of the ships, valuation of the goodwill, I mean, it's pretty reasonable. They've been doing this for decades. So hopefully they're doing a smart thing with it. It's all audited. It all looks really nice. If we go over and we take a look at their stock chart, we can see that they've been doing pretty well up until recently when they started dumping pretty hardcore. They've even gotten down to FTSE level of performance, which is pretty bad. When you get to the level of performance of the FTSE, which is the European stock market, you've done something wrong because those guys are always trailing. So it shows that it could be a pretty solid opportunity to snap up some shares. You can look at the cumulative returns again. They are breaking even with the FTSE, which is just awful. But they were beating the market for a good chunk of time and beating their sector, which is great. I would like to see them beating the Nasdaq. I don't think they have been, but this could be sort of a turnaround point where maybe if you look at these guys in the long term, they haven't really been the most outperforming stock on the planet. But what's cool is they've like doubled pretty quickly, like 1, 2, 3, 4, 5 times or so. And so like it might not be, I don't think, a hold for like the next 30 years. But I mean, you could hold this thing for like 3 or 4 years and get a pretty sizable return from it, get a bulk of the gains from it, and then just sell and then do it again. It reminds me a lot of Domino's pizza stock, and it's the exact same thing where like I wouldn't really want to be holding Domino's for like the next 30 years. But if you look at the stock, I think I've made probably 4 or 5 trades on these guys in like the past year. There's a lot of really, really great opportunities, just quickly glancing at it. A lot of really great opportunities to just get in and then take some profit. And I'm thinking more recently, so I'll look at the weekly chart because most of my trades have been a little more recent. The long term on this has been phenomenal. But like there was this massive drop, and you get in, you sell. This massive drop, you get in, you sell. I remember this day was this massive drop, you get in and sell. This day was this massive drop, you get in and sell. And then recently it's been a kind of a turn because of the recession and all that stuff. And that's kind of what I see a lot in, this isn't like something I would want to hold like for the rest of my life, but it's something that I think you can do a pretty nice job of just getting in and getting out of. And so the question becomes, how do you know when to get in and when to get out? And I think probably the biggest thing to look at, and we'll get into that in just a second. First thing I want to see is I want to see their WACC. And I think this number will probably increase a lot just because of how much risk they've taken on in the past like 3 months. But right now it looks like their WACC is 6%, so they're taking on debt at about a 6% rate, and they're creating about a 9% return on that debt, which is nice, that's sustainable, and that's very reasonable for buying cruise ships. I think that's a pretty reasonable return on a capital invested, and a pretty reasonable WACC for a company that is influenced so much by international trade and international regulation. Not necessarily regulation, but like international supply and demand. I think it's pretty reasonable. So with that said, the question is, how do you know like when to buy and sell this stock? So I think this is a really, really great swing trade. It's not something I would hold for the next like 30 years, but I like this is a pretty nice trade. And we'll look at leveraging with options in just a second, but there's some really, really nice potential on this investment. So the first thing I like more than anything else is this monthly MACD. Like if these guys cross the monthly MACD, I think that's really going to be your golden indicator. That's going to be probably the most important thing to look at. Now the second thing I want to look at that's really important is the moving averages. So right here we've got the 50 in purple and the 200 in red, and I think something we need to be careful about is if they have a death cross, it wouldn't be great to see it. They've had a death cross on the weekly chart. They had a death cross on the weekly chart in 2008. And after this cross, they went down a bunch until they crossed over this 50 moving average on the weekly, which if we look, that was at about May of 2009. And so if we look at the MACD on the monthly, we can see that the MACD on the monthly crossed over about the next month after June of 2009. So I think really the strat here is very, very, very simple. We want to see 2 things. The first thing we want to see is a weekly cross over the 50 moving average, the 50 SMA. And the next thing we want to see is a monthly MACD cross. I think if we see these 2 things, this should pretty much be a solid, I would say probably 6 to 12 month play. And you can leverage that with options if you want. Last time they crossed over and did something like that, it took, so I think that's a pretty reasonable. I think these guys could go from maybe like 28 or so, or maybe like 25 or in the 20s, depends on when the crossover happens. I'd say they could go from that to maybe about 40. So you're looking at maybe conservatively a $15 price movement on this stock. So if we go over and we look at the I would be looking probably, just to understand the pricing of it, I'll look maybe 8 months out at like October's. I think it's a pretty reasonable date to look at. And right now, the October calls are give or take $5 near the money. And you can buy, it looks like $5 out of the monies for about $4. And you can buy $10 out of the monies, or $12 out of the monies for about $2. And I think that might be a little bit risky. To see them at 30 would have to have, they would have to go to like 36, which is kind of high. I think maybe conservatively a target on this, just to be conservative, is like 34, give or take. And so if we were looking at maybe getting the highest return on invested capital, I think it would make sense. Like if you bought 30s, you'd be looking at about a 2x return. If you buy like 25s though, at $4, you're looking at an inherent value of about $10, which is about a 2.5x return, which I think might be kind of your sweet spot here. If you get 20s, if you get 20s, you'll have an inherent value of $15. So that would be about a 3x return, and I think that's probably going to be your best return. It's also going to be the most upfront capital investing because these are the most expensive contracts. So you're going to be putting the most risk up on those near the money contracts. But if these guys cross over with the MACD and they cross over with the weekly moving average, I wouldn't really hesitate. I think this would be a pretty nice trade to make near the money calls. Obviously, the pricing is going to be different when they actually do cross over. So do this same exercise and look at the prices and the premium. But I think pretty reasonably, this could be a pretty solid investment once those two things happen and you have that cross on the MACD, you have that cross on the weekly. You could try to time this. Honestly, they'll probably go lower if the coronavirus news goes out of hand again. If the market dumps in the coming months, and they'll probably dump alongside them. If their dividend gets cut, they're probably going to have a pretty big dump. And so if you're super smart, you could probably time a bottom on this near 12, give or take. I don't know, they could probably get there. And I would not hesitate. That could be a really, really great position too if you want to do a little more active management. If you get $12 calls, that would be, probably $5 a call, and those could turn into about $25, which is about a 5x return on your investment. A little bit riskier, but I would really just stress, this is a pretty solid investment. It's kind of hard to go wrong with it as long as you have enough time. If you don't want to worry about the time thing, I would just recommend going straight equity and just buy it at $10 or 15 or 20 a share. You're going to pay more, you're going to get less returns. Obviously, you only make 10 from 20 is about a 50% return versus a 400% return. You're not going to have as great returns, but it's going to be way less risky. And you'll get that 13% dividend, which is pretty nice. I don't know if they'll continue with that or not. If you want to go a little bit safer, you could probably, I really don't think you could go wrong with this on a straight equity play once they bottom or once they reverse. Just looking at it historically, they've just done so well historically and always kind of rebounded. It might take a little bit of time, but equity here looks pretty solid. I wouldn't do it right now. I think the markets and the news are really going to hammer these guys down a little bit lower. They're a good chunk lower based off of the news. And we'll see how the news comes out next week or so, but once their earnings comes out, they're probably going to go down a bunch. I think maybe in the next 3 months though, they'll hit the bottom somewhere and they'll start reversing and start curling back up. As soon as this MACD crosses, I think that's really going to be, I want a real cross, it's got to actually cross. As soon as it does that, you should be looking at a solid play. You can either do it with just straight equity, or what I'll probably do is calls on these guys. Where the entry point is really depends on how the market reacts to the news on the virus, because that's really what the play is here. But even if you just look at these calls, these 220s were probably worth about 15 cents. Hey, this is John. I want to thank you so much for making it to the end of the video and hope you get a ton of value from the stock that we just broke down and hopefully learn a lot about them. Now, what's cool is if you have an investment that you think will look really, really nice, or maybe it's a potential investment that you're on the edge about, or maybe it's a stock that you're holding right now that you're just a little bit curious about, or maybe you want to get an outside perspective on it, what's cool is you really comment down below with the ticker of the stock. I'll actually put it in Queen for a potential new video coming out. Now, make sure you also subscribe so that when those new videos do come out, or when these new stocks do come out, you'll be able to YouTube will know to send you the stuff, and if you click the bell, you'll actually directly get a notification so that you don't miss any of the new investments that we break down on this channel. Now, what's also cool is if you want to learn how to outperform 99% of investors and radically limit your downside, even if you can't pass a finance test for your life or have nothing to start with but a few spare bucks, I want you to open up a new tab right now, or go to a new browser, wherever you are, and I want you to go to stockmarketsecretsexposed.com. And inside Stock Market Secrets Exposed, you get instant access to a course I used to sell for thousands, a very, very high-level seminar I gave. The students literally go through and in their first month make 5, 6 figures, and I can't guarantee anything, but I know for a fact that this stuff works and it's gold. What I want to do is I want to give you this course I used to sell for tons of time. I want to give it to you completely for free so you can learn the top 35 secrets that you can use within the next week to really, really crush your portfolio, really double it and radically limit that downside. So if you want instant access to that, what you got to do right now is open up a new browser tab and go to stockmarketsecretsexposed.com, and I'll send it to you for free. Okay? Sound cool? Sound fair? Thank you again so much for watching, and I will see you either in another video on here or over in the masterclass. Thanks. Bye.